going to share my screen. This is the Legal and Accounting Professional Services Worker Cooperatives webinar series presentation. This is number 3 in the series. The first 2 took place last month, and they are both available online, and those links will be shared. If you missed those first 2, you'll be able to jump backwards in time and listen to those as well. And I want to thank everyone who is joining us today for your time and for your interest. And we hope that we'll be able to engage you on these topics, but also if you're in Chicago or near Chicago or coming to Chicago at any time, be a part of what's exciting happening there, because it is some great stuff. And today, the City of Chicago's Community Wealth Building Initiative is the funding organization for this webinar series. And I am Frank Satira from the Democracy at Work Institute. I'm the Business Transfers Program Director. And that means that I manage a program dedicated to employee ownership and conversions, particularly from legacy businesses into employee-owned businesses, whether those are worker co-ops, ESOPs, or the newest thing on the block, the EOT, or the Employee Ownership Trust. This is a little bit look at our agenda. I'm going to give a little bit of an introductory session here just for a few minutes, and then we're going to turn it over to our panelists, Alex Fisher from ABC, a bookkeeping cooperative, Nancy McClellan, CPA from the Dancing Accountant, and Sarah Kaplan, managing partner at Pathlight Law. And then we're reserving time at the end so that you'll have the opportunity to ask questions and answers, and so that we can also fill you in on what's next and other actions that you can take. Feel free to blow up the chat as much as you want. There's also a question and answer panel. If you want to have a question, you want to make sure that we see it, it's always a good idea to put it in the Q&A panel and not the chat, where it might just get pushed aside. But we are going to keep our eye on it to the best of our ability. As I mentioned, the Chicago Community Wealth Building Initiative, or CCWBI, is a $6 million program funded by American Rescue Act grants. And it is intended to create a lot of opportunities and a lot of programming and resources related to research and convening, education outreach. As you can see, all these different things that you would hope that an educational and implementation program like this would do. It's based upon the city's Office of Equity and Racial Justice and their vision of a democratic and reparative economy. So my role is the educating the ecosystem components, where we are looking at connecting folks in the world who are doing this work with each other and with workers and worker co-ops and people who are interested in potentially forming and creating a worker co-op as well. DOWI, my organization, the Democracy at Work Institute, we're a sister organization with the U.S. Federation of Worker Co-ops, or the Federation for short. The Federation is a 501c4 that acts as sort of a chamber of commerce of worker co-ops across the United States. DOWI works more in field building, data research, data analytics, and expanding opportunities for low-wage workers, immigrants, people of color, through testing innovations and unlocking resources over time. And as I mentioned, here in Chicago, we're partnering with local CBOs, and one of those partnerships beyond this webinar series that you'll hear about either during this session or at some other time in the near future is this series of Matchmaker in-person events that we're going to be holding in Chicago. There's going to be 2 of those this summer, and we hope that people who are participating in these webinars will take that next opportunity to come out in person, engage, and maybe make those connections one-on-one that you need to for facilitating the services that you need, the development needs that you have, and the financing, all those great things. All right. History, really, this information is all over the internet and the interwebs right now. We're going to move forward with the somewhat of a simple assumption that you kind of understand this, but in 1 or 2 sentences, a lot of attention has been brought forth into communities about worker cooperatives and the benefits of worker cooperatives and the potential of them because of the baby boomer generation and its retirement years. And we know that hundreds of thousands of businesses will be transferring from ownership from those baby boomer owners. And what's going to happen to them Well, many of them will probably just close their doors or shut down. Jobs may be lost, assets may be liquidated. Larger companies may purchase them and change operations to a great extent. Our vision and many others' vision is to keep those doors open by converting those into worker-owned businesses. And at the same time, then, as the research has shown, that increases the job quality, increases the wealth opportunities, and addresses inequality by transferring that wealth to the workers themselves. This is just a little bit of worker co-ops by the numbers. These are statistics published by the National Cooperative Business Association, but you can see that a lot of the work that people in the field are doing is having impacts. More than 50% of worker owners in worker co-ops are made up of people of color and people identifying as female. Worker co-ops are seen to have a 2/3 more likely chance to succeed. Worker co-op owners have a 5% higher productivity levels and often report higher levels of job satisfaction. The pay ratio between the CEO to the worker is 2 to 1 on average. That's down from 303 to 1, the average United States CEO worker pay ratio. And then employee turnover is also much lower, about 15% compared to 40 to 60% in the industry. So all those positives, all those benefits are things that we are working to enable for people in the communities across the country. How I do that within Dowie and the Democracy at Work Institute primarily is through management of the Workers to Owners Collaborative, also known as W2O. This is a group of 30+ developers and technical assistance providers across the country who specialize in conversions to employee ownership. We have monthly calls in which we have dialogues and skill sharing, sort of peer-to-peer learning. We try to reach people who are not active in the field as of yet, particularly people of color and people in rural areas who may not have been exposed to this. We do measurement and metrics. Our Workers to Owners members provide us with reports on a quarterly basis that indicates how they are proceeding through the pipeline process with their businesses that they're working with. And then at the end of that pipeline, we're able to look at numbers such as jobs saved, financing practices, and so forth. We have a website, and we are always looking for new members. There's no cost to join Workers to Owners. There is a learning tier if you're not currently working with employee-owned companies, and there is a general tier, but there are also some paid tiers that give you a few extra benefits. Becoming employee owned is that website campaign. This is where you'll find a lot of stories of successful conversions and transitions to employee ownership. And there is a search option. You can look according to industry, you can look according to state, you can look according to size, and we're constantly updating this with new stories. And this is what we always hear from people who are in municipal or government leadership positions, that they want to hear more stories. So we're working to give it to them on a regular basis. We practice and share and help coordinate with our members and with people who are learning about the process of employee ownership conversion, the EASES process, EASES, the 5-phase stages of employee ownership development: explore, assess, structure, complete, and support. And we can set you up with more sources on using that structure. We also take our data analytics according to those phases and look at it in those distinct measures. And this is just one example of some of the types of data that we're able to share with our members, looking at, according to deal size, what's the percentage of a conversion deal that was successfully financed. And this is a simple version broken down into 3 categories: employee equity, seller debt, and outside debt. But we look at it in more detail as well. But this can give you a good idea as to how people are financing those conversions. And I'm going to hold that slide for a little bit later when I close out this webinar, but it is time for us to jump into our sessions with our presenters. I'm going to stop my screen share. And I am going to welcome Alex Fisher from ABC, a bookkeeping cooperative, to take the floor.
Hi, everyone. So excited to be here and be the first presenter of the three of us. My name is Alex Fisher. I'm here with a bookkeeping cooperative. And before I get into that, I just wanted to share a quick personal note, which is that I have several generations of family from Chicago, my Sicilian family that were business owners, local and small business owners, including my nanny, aka my grandma, back in the like 50s, 60s, owned a pub. And really, sometimes I think about what would happen if her business and also my uncle's grocery store and the apartment building they owned had been kept in community, either by co-op or other means. So just when I think about Chicago and I think about the work that everyone's doing towards co-op development, I also have a personal attachment to what business community there could or does look like. So that's not what you're here to listen to me talk about. But it does be like, oh, hello, I live in Vermont. What is my connection to Chicago? So I'm here representing a bookkeeping cooperative. We are a worker-owned cooperative that works with many types of organizations, including other worker co-ops, nonprofits, small businesses, and we focus on bookkeeping, consulting, and training for the solidarity economy. We are a unionized worker-owned cooperative with 7 members. So 7 of us are currently worker owners. We are a fully women and non-binary owned company or co-op, and we are majority people of color owned. The co-op was started in 2010, and again, our focus is on providing bookkeeping, consulting, and training to co-ops, nonprofits, small businesses in the solidarity economy. We work fully remotely across the country. And the one thing we don't do that we often get asked about is taxes, but luckily there's a CPA here to cover that. So I'll be focusing today on just sharing a little bit about our work with other worker co-ops and specifically in the sort of bookkeeping and financial education areas. Just trying to look at my notes. So one of the things that I'm here to frame for us is that there are a lot of types of cooperatives out there. Some examples are member co-ops. So that means that they are owned by the members, often the customers, and some examples are food co-ops. If you have a neighborhood food co-op, REI, the outdoor company co-op, is also member owned. They're kind of a famous national one. You also have your producer co-ops. So that's the folks that make the goods or make what's being sold, own the co-op. And examples are often in like big ag. So that's like Cabot out here in New England, Land O'Lakes, things like that. So again, we have member co-ops, producer co-ops. There's also housing co-ops. So those are owned again by the people that live there. We also have multi-stakeholder co-ops. There's starting to be a rise of real estate co-ops, so they own real estate together. But what we're focusing on today is a small sector within the realm of co-ops for simply worker co-ops. And so worker co-ops are owned by the workers and employees, and with the concept of one share, one vote. So I'll give as many examples as I can from our co-op. So again, we're a 7-member co-op, which means whenever we have board level decisions, everyone gets one vote, and we all buy in with a membership share that is the same, and that is our one share that then allows us to have one vote. So everyone has an equal technical amount of power in the co-op. And I will also try to keep an eye on the chat as I go. So when we think about bookkeeping and finance for worker co-ops, the thing that comes to mind for me that is most distinctive in working with other worker co-ops is the democratic management element. So in worker co-ops, with that one worker or one member, one vote, what that means is we are shifting often from the structure of like a single finance expert, whether that is the sole business owner, a CFO, or a finance manager. And we're moving towards building skills for the whole team. So this is a lot for us in the work that we do at ABC around more of a perspective shift towards empowering and skill building with the entire ownership team, which is often all, if not the majority of the workers, right, that are owners, to support them in taking on the ownership skills and the ownership mentality of making decisions. And I'm going to walk you through 2 case studies of what we've done and sort of what it looks like to do the bookkeeping work with worker co-ops. So the first case study is a very short one, but I wanted to really highlight a key piece here. So this was a co-op that we worked with, and by a co-op, I mean many, where we were coming in to simply book and record the retained earnings and patronage to the balance sheet at the end of the day. So this is like the technical knowledge that's needed to do bookkeeping for a worker co-op. The good news is it's not a lot of new information, and in fact is often sometimes simpler than some of the other ways that organizations are incorporated. So nonprofits have their own wild world of bookkeeping, and the sort of restricted, unrestricted TRNA world, so complicated. The good news here is bookkeeping for worker co-ops has your basic GAAP protocols plus a few extra goodies. So one of the pieces that makes worker co-ops very different from other organizations is that we are taking what is often referred to as profit at the end of the year and making decisions to split it into retained earnings and patronage. And in response to the question, yes, what is GAAP? GAAP is the generally accepted accounting practices. So that's sort of like the legal world of, or the sort of governing rule of how finance works. Principles, sorry, great. Thank you, Nancy. So what I'm mostly highlighting here is that there's not a lot of new stuff. So if you don't need to follow all the details, but what we did was worked with a co-op to say, here is their net income at the end of the year. It was $16,675. It was their first year of business. And what I'm wanting to highlight here is how their balance sheet looks and how you can set it up for a co-op in a way that helps them understand where that net income goes and the different sort of decisions that are being made. So again, the main pieces here that I want to share are how to set up your balance sheet and also what those different elements are. So in our worker co-ops, each worker owner, when we set up their equity accounts, has their paid in capital, which is their member share. So each member in this organization, Francesca, Ria, and Stephanie, all paid in $10,000 as their membership share. And it can range, I've seen the range of $50 to $20,000, depending on the type of industry you're working in. And that was done throughout the year. So that creates an equity for each of them that we have separated out so we can easily see, did each member pay in their capital amount? And then what we did was walk them through splitting out their net income into their patronage and their retained earnings. So essentially what's staying within the co-op and what is being dispersed to the members. I'm not going to get into all the detail, but the main pieces here are we like to assign retained patronage, aka what they will be paid out when they leave the co-op. That can build over time, so that way we can easily track each person's total equity. We assigned what is going to be paid out in cash as a liability. We're assigning what is going to be paid out in the future as their owner equity, and then we assign to retained earnings what is going to be left in the co-op. I'm not expecting anyone to get all of this right now, but the idea is these are the only major elements that you would need to add to your toolkit on bookkeeping in order to work with co-ops. The other case study that I wanted to share briefly is more about involving membership in those decisions. So the deliverable was to support our full membership involvement in patronage allocation. And here, ABC specializes in being a worker co-op, consulting, and education. So if you are a firm that is doing bookkeeping, consulting, and training, this type of case might be something you do. If you're like, we just do the bookkeeping, then this might not be in your realm. But really what we did here was focus on, again, that piece of engaging the entire membership to feel confident in participating in ownership decisions. So we started by cleaning up their chart of accounts to create easier to read reports, to split out the member equity accounts, as I showed before, so we can easily see who has or owes what. We did co-op-wide financial education workshops, so that way everyone was more skilled and comfortable in talking about the finances and understanding the implications of their decisions. And then we facilitated their patronage allocation conversations. So again, the range of work that we've done with co-ops is everything from the basic, we're just going to get into your balance sheet and kind of put things where they go, to a larger scope of we want to work with the members and the owners to increase your skill and confidence in making ownership level financial decisions. And the last slide is just ways that you can get more involved with ABC or follow up with us. We also love to support you by teaching you the things that I just shared. So with that, my intro is on the basic bookkeeping level, and I'm very excited to sort of pass it up the level of complication over to Nancy.
Thank you so much, Alex. I am going to disagree with the passing it up the level of complication. We are very much working in parallel with each other. One of the things that I talk about when I discuss tax, not specific to co-ops, but when I'm talking about tax with my world of small businesses, small business owners, and the colleagues of mine who consult with small business owners, compliance is absolutely essential. If the books aren't right, there is no compliance. We cannot do the tax work appropriately. So it's not going up the chain, it's going across the chain. So we appreciate what you do. I especially really loved what you said in case study 2 about education, because I do feel like that is really where we shine. We can all do compliance work, again, whether it's just working with small businesses or it's working with co-ops. We can all do compliance work, which means, are we getting these things right? Are we following GAAP? Are we getting the tax return filed? But it's really in the education about how do we take those co-op tenets that are specific to co-ops, right? How do we take those and fit them into these compliance structures? And that can be immensely confusing for our clients, understandably. Woo! I am going to stop the share there because I did something wrong. Okay, there we go. And now we're going to share. Give me just a moment here to get the slideshow started. And now we're going to move to presenter view. All right, everybody can see my slides okay?
That looks good.
Great, thank you so much. I appreciate it. So let me move this around here. So I'm going to also do a few worker co-op case studies. I am deeply grateful to Alex for having explained already what these different types of co-ops are that are out there, because there are many of them. It can make it confusing when people say, oh, you're doing co-op bookkeeping, you're doing co-op accounting, right? This kind of consulting. Well, what kind of co-op? Because everything changes depending on what type of co-op you are. I am Nancy McClellan. As Frank shared earlier, we're celebrating 23 years in Logan Square. I've actually been in Logan Square for 25 years, celebrating that this year, but started my CPA firm 23 years ago. I saw that there were some Logan Square people in the chat. Give it up. I can't see the chat right now, so Alex, you're going to have to field any of those questions for me like I was doing for you. But Center for Changing Lives, love you guys. I'm a donor and a friend with one of your board members. I've been doing co-op work since 2009, and that started with our local co-op, our local food co-op, the Dill Pickle Food Co-op. I had specialized in small businesses. They reached out to ask if I would be their accountant. And I said, oh, co-op accounting and taxation is so complicated. It's really its own thing. You need to find somebody who is a specialist. And they said, okay, sure. Even though you're a member of our co-op and you're an accountant, I get it. We'll go find somebody. And they came back later on and they said, hey, so there aren't any co-op CPAs in Chicago. So can you work with us after all? And I said, if you'll be patient with me, I'll be patient with you. And we figured it out together. Luckily, since then, we've done a lot of training through National Society of Accountants for Cooperatives, through the City of Chicago's Wealth Building Initiative and other programs of theirs, and through the Co-op Professionals Guild. And now there are lots of co-op accountants in Chicago, I'm happy to say. I do have an award-winning blog at thedancingaccountant.com, so please check that out. There is a tag that is specific to cooperatives if you're looking to find just that information. So my first example is a client of ours that is a construction co-op, and I picked them first because this is what you would expect. This is like the straightforward, nothing too odd about it. This is what a co-op might look like. They were transitioning to employee ownership from a long time. Having a single owner was in that process that they got in touch with me. The new company was a startup, but they wanted to make sure that they were not losing too much of their investment in the process, and something that Frank knows a lot about. It was very small. There were only 4 members. So the first thing that we did with them, if we were going to be doing if we were going to be working with the new startup, we could not do the valuation on the company that they were transitioning from, because that would be a conflict of interest. So we had to find a referral for them so that they would be able to get an appropriate valuation. There were tax issues that were related to the sale. They wanted to make sure that not too much of this money was going to be eaten up in taxes. They wanted to preserve the capital as much as possible so that he could invest it in this new startup so that they would have a better chance of success. Something that I do with every single one of the co-ops, arguably the most important thing that I do with every single one of the co-ops that I work with, is entity choice. And the reason that I mentioned that this particular construction co-op, this was kind of the way you expect it to work, was from the outset. They knew that they didn't have any complications that would prevent them from being any other type of entity than an actual, what we call subchapter T co-op. Now, a subchapter T co-op, for those of you who don't know what that is, you think of C corporations and S corporations and partnerships. These are all governed by different chapters in the IRS code. Subchapter C, subchapter S, partnerships are subchapter K. A subchapter T means it's a co-op. So you start as a C corp, and all of the things that you're required to do that a C corp would have to do, you do all of those, and then you get this extra subchapter kind of layered on top that makes you officially a co-op in the eyes of the tax code. Now you've got your co-op tenets, which is outside of the scope of what we're covering today. You have to cover those tenets no matter what kind of entity you are going to be. But subchapter T from a tax perspective is your traditional co-op. And then as Alex was saying, we needed to educate them. What basis are you going to be using for patronage? Most worker co-ops use hours worked, but that is not how it has to be. It could be pieces produced. There are lots of different ways that it could be. They knew they wanted to do hours worked from the outset, so that wasn't something that we had to spend a lot of time with them on. And they wanted to learn how to prepare their own 1099 PATR forms. Those are your patronage forms. When you are a sole proprietor, you might get a 1099 NEC for non-employee compensation. You might get a 1099 MISC for rent. You get a 1099 PATR for the portion of your distribution that is related to patronage. So we taught them how to do that. Next, we've got a company that is a bicycle courier company. Now, this was a startup. They had lots of labor law concerns. So this was a much more complicated co-op to work with than the construction co-op that we talked about initially. And what was complex about it was that couriers are really taken advantage of in our society. They're generally improperly classified as independent contractors, which means they don't get workers' compensation. They don't get unemployment coverage. They don't get your basic protections of, your hourly minimum wage. There are lots of things that they are not getting when they are improperly classified as independent contractors. Well, if they become a co-op, at least they're in a situation where they're not giving all their profit away to someone else, lining somebody else's pockets, right? However, you still have the complexity that they may not have enough money to pay for workers' compensation, minimum wage, state unemployment. So those labor law concerns can really make things complicated. They also wanted to do their own bookkeeping. So there was a lot of education going on there. And to make matters even more complex, we're talking about a large co-op, right? They have about 100 members, occasional non-members who are coming in and out, maybe just riding a couple shifts while they're in town. So we started with entity choice, which is generally where we start. In this particular situation, they actually decided to be an LLC that would be taxed as a partnership. The reason for this is they would get the liability protection that the LLC offered. However, a partnership does not have to follow all of the same rules that a C Corp or a C Corp under subchapter T would have to follow. They are not considered employees of their own company. And I'm going to say that again because this is very important. A partnership has members or partners. They are not considered employees of their own company. As a result, don't have to pay minimum wage, don't have to necessarily have worker compensation, although it is something that you can do, and they don't have to pay for state unemployment. So that can make things complicated because partnerships are kind of a pain. There's a lot of education and training involved because, again, we were teaching them to do their own bookkeeping. The bylaws and the operating agreement were extremely complicated, and we have spent and continue to spend a lot of time with their attorneys tweaking the bylaws and operating agreement because you're working with a partnership. A partnership, by definition, is managed. You've got these capital accounts, right? So how do you take that one member, one vote subordination of capital? How do you take that co-op tenant and kind of fit it into a partnership situation so that the capital accounts are actually properly representing what it is that you are trying to do here? So that can be very complicated. And those co-op tenants, patronage versus capital, as I was talking about, we also had to do a very large partnership tax return. I'll tell y'all, partnerships, no fun, not enjoyable. I do not recommend this approach if you do not have to take it, but it is pretty common for worker co-ops. We also have a holistic health services client. This was a startup that started as an LLC, taxed as a partnership, and then they converted to subchapter T co-op treatment. They had both members and non-members working there, which can be super complicated. A lot of corollary goals. Corollary goals can take down a co-op. Those corollary goals of helping the community can make you look a lot more like a nonprofit, right? But you're not a nonprofit. The bottom line has to come first. And then they take most of their capital and they reinvest it in the company. So again, looking a lot more like a nonprofit. We started off with entity choice, as I mentioned. They started as an LLC, then converted to sub-T treatment. So we had to remove all of those partner capital accounts and make them member equity accounts, like Alex was showing those member equity accounts on the balance sheet. We had to literally transfer all of those things because it's as if you're divesting of the partnership when you create that subchapter T co-op. Their bylaws and operating agreement also were complicated because you had both members and non-members, and I'm sure Sarah will talk about that complication a little bit. We had to spend a lot of time with them working on chart of accounts development and finding a fiscal sponsor so that they could meet those corollary goals, track them properly, and take the things that were not related to increasing the bottom line and sort of move them aside, or be able to accept donations through their fiscal sponsor to fund those corollary goals. Last but not least, they have a lot of retained patronage because they are reinvesting that capital. So the patronage is not getting paid out to them. Lots of themes that come up when we are talking about these different kinds of co-ops. So I'm just going to summarize. Maximizing the tax situation is not always the priority. We generally think of that being the priority. Co-ops have a lot of other things going on. Entity choice. We've got labor law concerns. We've got trying to fit those co-op tenants into an entity type that may not have been designed to support those co-op tenants. We've got democracy, member versus non-member. Work with your client's attorneys, develop a relationship, co-firm, collaborate. You can't do this alone, and neither can they. I recommend this with all of my clients, all of my small business clients, but especially co-ops. Luckily, co-op attorneys tend to be a lot nicer than other attorneys. So you got a good starting place there. Tracking patronage versus subordinated capital, right? So if you're subordinating capital, how do you fit that into a member equity patronage situation? Education, you've got internal bookkeeping when they're doing it themselves. You've got member treatment of patronage. Here are a bunch of resources. I love the National Society of Accounts for Cooperatives is amazing, and you will get your membership fee back like within the first couple months for the amount of education that they provide. They are absolutely amazing. The Co-op Professionals Guild, which Sarah is going to talk about. She is very active with them. It's an incredible organization. University of Wisconsin Center for Cooperatives is probably the best website out there that I've ever seen about cooperatives. Lots of great education there. And this YouTube link here is a bonus that I'm giving you guys for a webinar that I gave for the National Society of Accountants for Cooperatives that talks about a lot of these different kinds of cooperatives. It's an hour-long thing, so you get to hear a little bit more about tax. And please join our mailing list so that you can learn more about co-ops. With that, woo, big whirlwind. I am going to send it over to Sarah Kaplan, who I have worked with many times. We have a lot of clients in common. She is an absolutely amazing wealth of knowledge and very dedicated to her work as well with the Co-op Professionals Guild. So Sarah, take it away.
Thank you so much, Nancy, for that nice introduction. All right. Okay. Can everyone see my slides now?
You look great.
Great. I'm going to go fast as I'm the last presenter. So my name is Sarah Kaplan. I'm a corporate and securities lawyer, which means that I do business law, and I have been focusing on cooperatives really since I started my practice in 2012. And, you know, since starting up focusing on worker co-ops, I now as a grown-up lawyer, I do worker ownership conversions, and securities law is for when people want to invest in a business, and that all kind of works together in an overall scheme of community wealth building legal service. So today's webinar is really aimed at professionals who want to add co-ops to their practice. So what I'm about to talk about is kind of like, what are some examples of what I would do for a worker co-op? And I have 3 examples of what would a legal service be for a worker co-op? What does it take to add that to your legal practice? I have a feeling there are people on the call who are not lawyers or accountants. If you're in bookkeeping and accounting, great. I think it's been really helpful so far. If there are any lawyers who have specific questions, feel free to follow up with me about this. But if there are people wanting to know about the law for co-ops, that's a totally different webinar. And actually, I did participate in a webinar with Dowie in April that was all about worker co-op legal choices and like understanding the limited worker cooperative association law, which is an Illinois law. So that's a whole other presentation that like I think that other webinar might be also available to the public, but it's not this webinar. So with that, okay. So here's an example of a worker co-op transition. And this is their logo. I'm sharing this with their permission. So promoting their logo and their business. What we did, I'm actually not 100% sure if my recollection matches what Nancy talked about, but my recollection was that the founder had an existing LLC and wanted it to become a worker co-op. So we did a really simple type of transition, which was adopting a new operating agreement. The operating agreement, as you know, if you're a lawyer, is the internal governance document of an LLC. You can set up co-op governance and co-op style profit sharing contractually inside of an LLC. So we did a new operating agreement and then we admitted the other workers as members. And so it became a co-op LLC. Is what it is just a limited liability company that operates as a co-op. And that is one of the really common ways of setting up a worker co-op. Another example is Chicago King Cooperative, and they were a startup. And so I wanted to highlight this client as a worker co-op startup, but what I'm about to give as an example is not specific to them, just the types of legal service that you would do for a startup worker co-op would be choice of legal entity. And so in addition to all of the tax considerations that Nancy just talked about with, do you want partnership tax? That is one of the factors that you would think about, because you could actually have a worker-owned corporation, but if you do that, then you're going to have corporate tax for sure. Whereas if you choose a limited worker cooperative association or LLC, you would be taxed as a partnership by default, but you could elect to be taxed as a corporation. So, and then there are other factors to consider. And by the way, for out-of-state participants, so this is a Chicago-specific, Illinois-specific webinar, thanks to Chicago's Community Wealth Ecosystem Building initiative. But for people in other states, there are limited cooperative association laws in some states. They're usually not called limited worker cooperative association. That is an Illinois law, but there may be an LCA, and you can actually use an LCA law from another state. So for a worker co-op startup, legal entity choice. And so as a practitioner, you would just read the statutes and then be able to add those legal entities as an option. I counseled them on how non-workers could invest. How would you structure a preferred interest, preferred share, or preferred LLC membership interest? Then you go ahead and form the entity, draft the cooperative agreement or bylaws or operating agreement, help them get an EIN, and then help counsel them. And actually, we involve an accountant if possible, but sometimes we have to make a decision before they can actually get contracted with an accountant, is one of the challenges that I find is happening in real life. But we need to make sure that if they're going to make an election, that they do it timely. And then, so at this point, I want to pause, and I'm not looking at the chat. Are there any questions that relate to this?
There was one question about limitations to allocating surplus to owners' employees in training and development instead of cash or retained earnings. I don't know, that might be an accountant bookkeeping question. I don't know if you have anything to say on that, Sarah.
Can you use retained earnings for training and development? The answer is
Yeah,
yes.
I had, yeah, I think that is an accounting question there. But you wouldn't be allocating surplus for training and development. You would simply be spending money. The company, it would be a deductible expense of the company. So trip to Bali for spiritual awareness, certification on emotional intelligence, healthy food cooking class, you would need to follow the rules that a C Corp would have or a partnership would have. There are situations where those could end up being taxable income to the people who are receiving it. So we can talk a little bit more like about that afterward, but I want Sarah to be able to focus on her legal stuff, and we can come back to this question afterward if there's enough time.
Great. So as a practitioner, because this is a practitioner focused webinar, but again, like if people want general legal education about co-ops, there are other webinars that have already been given, and I'm happy to follow up. And so to add co-ops to a corporate lawyer practice, all you need to do is understand patronage. And so read subchapter T of the Internal Revenue Code. That is a good place to start. And then actually the next thing to do is read the cooperative information reports from USDA. And so here's one more example of what you might do if you're counseling co-ops. Actually, sorry. Here's an example of how to add co-ops to your practice without it being a huge burden. Something that I'm working on now, so they will remain nameless, showed me how easy it is to add co-ops to what's possible for clients in general without a practitioner having to really learn a new area of law if they're already well established and like to stick to what they're doing. So another lawyer's client decided to become a cooperative. They had a California general. So I'm licensed in Illinois and California. In California, there is a general business corporation. They decided to become a cooperative. This lawyer was not a cooperative specialist. She did some research, but she decided to bring in a cooperative specialist, which is myself. I work first directly with her, and then the client ended up hiring me as well, but it remains her client for everything that they normally work with her for. I'm only consulting on the co-op conversion. So all we did is amend the articles and exchange the shares. So I wrote a share exchange agreement or share purchase agreement where the co-op, the existing business is buying back the shares, and then those same people will get a membership in the co-op after the articles are amended. So those are some examples of how to add co-ops to your practice, and we can take questions, or I can stop sharing so everyone can take questions.
Yeah, we'll follow up with you, Sarah, with one question here. How do you decide between stock and non-stock co-ops?
Everyone uses stock. What I would do is say, is there a reason not to use stock? And then they wouldn't know the answer potentially. And then I would just say, let's just use stock. Like, I guess there are times when you don't need stock and it's okay to just have memberships. And then if someone said, what stock for, we don't need it. You know, wow, we have accountants and bookkeepers here.
Yeah, I'm gonna add to that, which is this is a question for that goes back to entity. I always say entity choice has to come first. The rest of this stuff comes afterwards. So if you are choosing an entity type that requires stock underlying it, so if you're a subchapter C corporation doing T, you gotta have stock. Like Sarah's saying, you start with stock.
So here's an example is California. I don't think this is actually relevant to Illinois. The Illinois Cooperative Corporation law assumes that you will have stock. But in California, the Cooperative Corporation law allows you to have memberships, stock or non-stock. So Nancy, if a co-op is trying to decide between using stock to represent equity or not, is one easier?
No, because in both situations, I mean, I guess I would say yes. I would go back to what you were just saying, where you're like, the default is stock. The default is you want to be a subchapter T cooperative. You want, because there's no tension between trying to take cooperative tenets and fit them into an entity that is not designed for cooperatives. So if you can be a subchapter T, like you're saying, start with stock. Is there a reason not to use stock? Well, yeah, labor laws, right? Like we can't comply with the labor laws that we would be required to comply with if we were, if we're going to be subchapter T. So that means we have to be an LLC or a partnership. And those by definition are non-stock organizations. They're member interest organizations. So again, work with the lawyer because it's really hard to make these decisions in a vacuum. If I could take a second to go back to something that you mentioned, Sarah, when you said that our memory of how that construction co-op, that those are different from the perspective of the IRS, and therefore my perspective, they were a startup. Because and this is a great example of working with the lawyer, because this was like months of work to get to the point where we were like, okay, what they want to do is convert the existing LLC into this wonderful thing that Illinois has, that is like an LLC, but it's specific to co-ops. But within that, you can choose whether to be taxed as a partnership or a cooperative. They chose to be taxed under subchapter T as a cooperative. So from the IRS's perspective, that subchapter T election was, it means that they were a startup in the eyes of the IRS because they were a completely different kind of entity than the sole proprietorship that it had been treated as before. So that there's a great example of like, okay, from my perspective over here, this was a startup organization. From Sarah's perspective, it was a conversion. So that's a great example about how those two things can actually coexist.
We are almost at the top of the hour. I want to ask folks to please type in your questions if you have additional questions. Otherwise, I'm going to start to close us out to respect everyone's time. First off, I want to appreciate Nancy, Sarah, and Alex, and I want to ask those on the call, if you want to share appreciations for them as well, please put those into the chat so that they can all feel that appreciation. Aside from that, what else is on tap? Well, there are some follow-ons that I'm going to be sharing with everyone here. In addition to the presentations that you saw today, the slide decks and some resources from our presenters and their contact information, we'll be connecting you with those matchmaker events that are upcoming. And if you're in Chicago and you want to be a part of planning those matchmaker events, let me know, because we would love to have additional participation in that way. There's a couple Chicago-centric mailing lists for Solidarity Economy and co-ops, and there is also the ccwbe.org hub out of the University of Illinois in Chicago that will have also a broad breadth of information related to the city's wealth building initiative and the participants and events that are related to that. Follow on from a broader perspective, you'll have access to me to answer questions as well, or to connect you with who you need connected to. I would invite you, if you're an advisor, consultant, a TA provider, or just a learner, to join our collaborative, and I'll have information sent to you on how to do that. And if you're a worker cooperative out there and you haven't yet joined the United States Federation of Worker Cooperatives, you can get on the map and you can take advantage of resources that they have. And then more specifically, if you're an SBDC advisor and or if you want access to the panelist toolbox, that'll be coming your way as well as in a specific way, some of the organizations, the Co-op Professionals Guild and the National Society of Co-op Accountants that were mentioned earlier, these specific entities. And then lastly, the United States National Worker Cooperative Conference, which is a joint venture of the Federation and Dowie, is coming to Chicago this fall, September 12th through the 14th. So save that date. Registration should be opening very soon, in the next week or 2 or 3, perhaps, once the agenda is finalized. And if you want to know more about how you can work with Dowie to engage your city, like we're engaging Chicago right now, please feel free to be in touch about that. And all right, I don't see any new questions. Any final words from our panelists?
I just wanted to thank you and the City of Chicago so much for inviting us to participate today. I truly believe that co-ops are the most sustainable entity type. They work for our communities. They work for the members of the co-ops. And it's a three-way win, right? Because it also works for society. And I'm so grateful that you had us here today and to be able to work with two such amazing members of the co-op community. Alex and Sarah, has been such a privilege.
Thank you so much for saying that, Nancy. It's been great to be with you all.
Yes, thanks everyone. And just really encouraging those of you that are in the bookkeeping field, there is lots of work for you. There is lots of need to support co-ops that are actually businesses. So I think this audience really understands that worker co-ops are a business and not like a community project. And so the business skills and technical assistance are super needed. And we need more folks in the finance and legal world supporting us as worker co-ops. So as the rep from a worker co-op, please join us in providing these amazing skills and places of expertise.
Thank you all very much. Have a wonderful rest of your day, and please let's stay connected and networked and moving forward for worker cooperatives in Chicago and across the country. So long.
Thanks, y'all.
Bye.